What's up, guys? Todd Robinson here. I want to walk you through exactly why investing in multifamily properties will blow single-family investing out of the water 10 times out of 10. So in this video, I'm going to break down the differences between single-family investing and multifamily investing, what you need to do to get started in multifamily investing, and I'm going to debunk some of the misconceptions about multifamily for you so that if you're thinking about making the jump between single-family and multifamily, you're going to know exactly what to do after you watch this video. So let's get into it, guys. I want to start off with a story of my experience as an attorney. So if those of you that don't know me, I'm a commercial real estate finance and investment lawyer by trade. I've got my own law firm in Atlanta, Georgia, and I've built a team of over 25 firms doing over $10 million a year. Alongside that, I've built my own commercial real estate portfolio of multifamily units of about 850 units. We're under contract for another 150 so far the third quarter of this year, 2026. So I've seen both sides of the deal. I've been on the legal side, closing these transactions. I've been on the operator, owner, and investor side, investing in these transactions. So I have seen it all when it comes to why multifamily is way better than single family, the benefits a multifamily investor gets, and also the legal traps that some investors fall into and the misconceptions of multifamily just in general. So I want to start off with telling you a story of me sitting across the table from one of my clients. The client was going to buy a 100-unit apartment building. And I'm sitting here closing the deal. We've structured the whole transaction. I prepared the operating agreements. I organized the org chart. I talked with his investors. I worked with his lender. We did the title work. We did the survey work. We're now at the closing table. We drafted the closing statement. We've done everything. And I look at the closing statement and I see there at the end, I see how much is due by the borrower. And it was $1.5 million for this particular deal. That was their equity. And I went and looked at my client and I said, how much are you actually putting into this transaction? Because I know you don't have $1.5 million, right? And I know we structured it as a syndication. I knew he had investors, but I wasn't exactly sure how much he was putting in. And he said, zero. I'm not putting in any money into the transaction. I've raised it all from investors. And I said, wow, that's amazing. And, we looked at the transaction a little bit further and, he was getting amazing tax benefits. His investors were getting amazing tax benefits. They were going to do a cost segregation study and they were going to use bonus depreciation and they were going to basically take a loss on this huge deal that they just bought. They increased their net worth by millions of dollars. And guess what? On paper, they're going to show a loss to the IRS. And it was at that moment that I realized I need to get into this game. I need to understand how this works. I know how it works on the legal side, but let me understand the investor side and the operations and the underwriting. And so that's what I did. I was on a journey to figure that out. And so really up until I'd say 2016, 17, 2018, I was learning from my clients, right? They didn't quite know that I was going to get into this perhaps on my own, but I learned the game from them and underwrote with them. I asked them questions. I developed my own underwriting software. And so when I realized that multifamily was the way to go, and I had thought about single family investing. I had actually had my first investment ever was one single family house where I was making $200 a month of passive income. Although I was sweating bullets whether the tenant was going to pay, I was waiting for the check to arrive, worried about, are we going to cover our mortgage this month, worried about the damages that the tenant was going to do to the property. So that was not generational wealth building in my view. I knew it was going to take a long time to build generational wealth through single family investing. So after this experience with this particular client, I made the mental shift that I need to get into multifamily, no questions asked. Once you get into multifamily, you understand this for yourself. You see it for yourself. It's just a bigger deal, bigger numbers, sure, but the process and the system is the same. Now, the reason why it's better than single family for multiple reasons, but one of the biggest reasons is a multifamily property is evaluated like a business. It's essentially an operating company that owns real estate. And by owning that real estate, you have to worry about the profits and the expenses and what's called your net operating income. Well, that's how you evaluate the value of a property. You have net operating income and you multiply that by what's called a cap rate, and that gives you the value. So you can force appreciation in a multifamily property, meaning you can improve the property to a point where you're charging higher rents, your NOI is increasing, and then by virtue of increasing your NOI, your value is increasing. You cannot do that in single family. Another reason why multifamily is better is the financing is a lot easier. You'd be surprised, but it's a lot harder to get a loan for a single family fix and flip at a good rate than it is to get a $5 million loan for an $8 million multifamily property. As long as the property is good and the numbers are good, a lender is much more likely to loan the money to you because they know the property is going to perform well and you've got good property management. Let's talk about economies of scale. Economies of scale, what that means is you have multiple tenants under one roof. If you have 200 single family homes, you are driving around town all day, looking at your houses, responding to tenant complaints. That's 200 different roofs. That's 200 insurance policies, 200 different tenants in 200 different locations. That is a lot of work. That's why we say that's essentially another full-time job for you. Now, multifamily, you would have 200 tenants under one roof. That in and of itself is a reason why multifamily is so much better than single family. Some people are concerned or nervous about how to buy multifamily, especially using other people's money. And this is where my expertise as a lawyer really comes in. When you go out and you buy a multifamily property, first of all, you're not going to buy it in your own personal name. You're going to buy it in the name of an LLC. And in the name of this LLC, that is a limited liability company. You are shielded from liability because if there's anything that goes wrong with the property, anyone gets sued, you're not personally liable. Your entity is liable. And your entity is going to have insurance, and it's not going to come out of your personal pocket. So that's one misconception that a lot of people don't understand. Secondly, the best deals out there will get loans from Fannie Mae or Freddie Mac. And when you get a loan from Fannie Mae or Freddie Mac, you'll sign what's called a non-recourse guarantee. That's fancy language that basically just means you're not personally liable for that debt. When you sign on a loan for your house or single family property, you sign a personal recourse. And that means if the company doesn't pay that debt, you have to pay that debt yourself. So another big difference between multifamily investing and single family investing. A lot of people, when they're getting into the multifamily, they stop and think to themselves, I don't have the money to do this, or I don't have the experience, or the market's too expensive right now, or they're just nervous about getting in, making that leap of faith. And I get it, right? You do have to have some money to get started, just like you would in any entrepreneurial business, right? Some startup capital, but not a lot. $10,000 to $20,000 would probably get you there. The biggest way people scale into this without any money is through what's called strategic partnerships. They create partners with other individuals that may have the capital, but you've got the hustle and the expertise. You take that hustle and expertise, that gets you on the team, that gets you a spot. One of our students just recently closed an 80-unit deal, $5.7 million. He put zero money into the deal. He didn't have any money, but he had a lot of hustle. He called the insurance broker. He did the lease audit. He's doing asset management. He is on that property every day, and that is his contribution, and that is worth something. That's how you get a stake in a larger property. And now he takes that and he goes out and he now can put $5.7 million of assets on his resume, on his website, that assets that he owns, and he can go out and just build on top of that. So if you ask me, multifamily blows single family investing out of the water 10 times out of 10. If I had to put my money anywhere and I was starting from zero, I would absolutely invest in multifamily 100%. And I would find a coach or a real estate mentor that not only understood the real estate and investing side, they understood the deal side and they understood the structuring side from a legal perspective. If you're interested in learning how to get into this game, make sure to book a call with my team. The link is below. I look forward to seeing you on the other side. Let's go.